You can make decent money, save consistently, even read investing books, and still lose enormous wealth because of one normal habit: waiting. Waiting for the market to calm down, waiting until you know more, waiting for the perfect entry point. The problem usually isn't investment knowledge, it's behavior. Most investors don't actually earn the market's return because emotions turn buy low, sell high into buy high, sell low. People buy after excitement, panic during crashes, then re-enter after recovery already happened. But the quieter mistake is delaying. Compounding is brutally time-sensitive. If you invest $200 a month starting at 25, you could end up with more than twice as much as someone who starts at 35 with the exact same contribution. That difference isn't intelligence, it's time. Your brain evolved to avoid danger, not maximize 40-year compounding. So make investing automatic. Reduce decisions. Stop chasing perfect timing. The market rewards consistency more than prediction.